Hello folks, welcome to 570 Sylvan Avenue, headquarters of Precedent Funding and Advisors and the 100 Mile Fund. Figured we start out here for our shareholder presentation. Some of you have never been to the office, so come on in. I got to hold the door from my man Octavio. Got my gloves and mask. Welcome to the Precedent Funding. I think I can take my mask off now. So here's where it all happens, folks. In here, you've all been invited. A lot of you attend our Tuesday meetings, and usually every Tuesday for 25 years at 8:30, we're having a meeting. And we reserve some seats for our guests. Anybody that's an investor knows they're always welcome, and I encourage you to attend. We're still doing them by Zoom, though. Here's my desk. This has been my desk since 1982. I am the receptionist. And this desk has seen a lot in 38 years. But I don't think it's seen anything like what we're going through. Not that I think that this virus is any worse than a lot of the other things in the world you can get, and Ebola and SARS and everything else. And it's seen a lot, and it's going to see a lot more. But that was my biggest investment of my life in 1982, by the way. And this is where the gang hangs out. And normally you got Simone, and you got Mike Cohen, and you got Derek Weissman, and you got Brian Foley, you got Caroline Smythe, you got Kyle Smythe, you got Allie Betts, you got Octavio, you got Omar Khan. And come on in and we'll get started. This is our living room. In the back is where we keep Alan Lazaroff, our CFO, and the auditors. And we do have guest desks, so if any of you investors are ever in the neighborhood and need a desk, we got plenty of desks for you. All right, so let's get to it. I got to give Octavio a minute to set up the camera, get rid of my gloves and mask. Got my hand sanitizer. Go ahead, Octavio. Plug your camera in. Hello, folks. It is April 15th at 12 noon. I now have to actually give the time because it seems that every time there's a press conference, there's something new you got to change or know about. We're now 30 days into this coronavirus quarantine. 2 months ago, the world seemed semi-normal. 6 months ago, nobody knew about this. Fortunately, we've been preparing for a recession for 2 years, but I don't think anything could prepare anybody for this. So welcome to our shareholder meeting. It's a little weird in an empty office, sitting in the living room of the office where we usually have everybody hanging out and bantering about what we're going to do next and what issues we have. Normally, we do this event. For those of you who've come, you know it's a fun time. We all get to see each other. For 20 years now, I've been doing shareholder events that are not your normal shareholder event. We do them at the Bicycle Club in Englewood Cliffs. We have some cocktails. We do some very formal stuff. We have some fun stuff. And then we hang out together and we get to see each other. And I miss you all. These are definitely trying times. That said, in the words of Jerry Garcia and one of my favorite songs, The Touch of Grey, we will get by and we will survive. We definitely will. We always do. So let me first start with, for my shareholders, there were 2 letters you recently received. And one was when we first shut down the office on March 12th. And I do have to tell you a couple of things because I was wrong about something. I did mention that our mantra has always been panic early, panic often, and you never have to panic. And I think we panicked way early. We started planning in January for this. As soon as we heard China had a problem, we started checking supply chains. And plan for the worst and work hard and be smart and pray for the best. So I think those 2 definitely apply, and we're adding one more mantra now, which is Louis Pasteur's famous quote, which is chance, favors the prepared mind, and it also favors the prepared person, prepared business. And also on March 1st, I had to disclose, knowing this pandemic or this virus was coming, I still can't pronounce the word, I put another $500,000 in the fund because I want to show everybody that I always put my money where my mouth is. Where I was wrong on March 12th was that I thought that this would be over in 90 days. And my first stress test was based on a 4-month analysis. And that is absolutely wrong at this point. And you will get into our new stress test, which takes us out to December 2021 and has a couple other variables. But I did want to point out that that first stress test of 4 months was wrong. On April 1st, I was happy to be able to get out, and I didn't say happy, I said thankful. I got out everybody's quarterly dividend. We have not missed a quarterly dividend since this fund started in October 11. And during my prior 2 funds, I've never missed a dividend ever. So we'll talk more about the dividend. I'm optimistic, and I'll explain why. I think one other thing is that no matter what I say today, it doesn't matter. Well, it matters. But Cuomo just came out and said today, 5 minutes ago, that he's extending the quarantine till May 15th. And de Blasio came out and said just now that he's going to close the beaches, which I think is insanity, for the summer. Coney Island closed for the summer. I don't know how he's going to keep the millions of people in New York from going to the beach, but we shall see, and we need to watch this. A couple of other little comments before we get started with the formal presentation is the good news is that Spain is restarting their economy. China is restarting, although we never know about China. France says they're opening up May 11th. Italy says they're opening up shortly and starting to do it in phases, and I hope so because we have a big furniture delivery coming from Italy for our micro apartments. And I made one comment on my Billy Ball segment. And by the way, you all got an email Tuesday. I did a Billy Ball segment on the virus, the economy, and everything else that was on my mind relative to where we should be going and what direction the country should be going in. I truly encourage you all to take a look. It's on the Proceed of Funding Facebook page, and you also all got an email with it. You'll either really like who you're invested with after that, or you might not. But it's from the heart and from the gut. So, but Goldman Sachs on Tuesday morning said, everybody's just got to get back to work. And my comment on Billy Ball was, what about partying, traveling, going to concerts, going to ball games? I don't think it's all just about putting people back to work. If we're only going to work and go home and lock ourselves up, why are we working, right? So I think that the big issue is this whole concept of the government controlling everybody. Interesting, this morning when I woke up, Michigan was having a protest in front of the State House saying, let us out. We're adults. We can figure this out on our own. Now, if my son hears that, he'll argue with me that we have to listen to the scientists. But, you know, I listened to 50 scientists in the past 2 months, and everyone says something different. And where were they all in January? JP Morgan had their earnings call. They took an $8 billion loss reserve against a $100 billion loan portfolio. So that's 8%. Not sure if that's enough, but that's the number they picked. And then yesterday, and I didn't understand why, real estate stocks jumped up. So I think that's more emotional, and look, I want everybody's stock to go up, but until the government kind of really gets it together, I don't know how we can all gauge everything. the interesting thing also this week, Florida's governor came out and said wrestling's an essential business. So they're having professional wrestling. I don't understand how, well, I do understand, it's all lobbyists and everything else, but the whole concept of the different industries being called essential, in New Jersey, thank God, Murphy calls alcohol essential. In Pennsylvania, unfortunately for them, it's not essential. So you kind of, unfortunately for me, because I manage your money and mine, I got to keep reading the tea leaves. But the stock market's completely irrational, a bunch of gamblers, in my opinion. I told everybody to get out in August of 19. I told everybody to get out again in December. And even with the first drop at 26, I said, please get out. So it's all about when we're going to return to normal. So I'm going to take you through our presentation, but it's still all about when we're going to get back to normal. And you got the California governor saying maybe 2021, he said this morning or last night. It's impossible to quarantine us until then. And my last note I wrote myself was, we're going to have revolts. And not to be overly radical, but I hope we do. Because the fact that I can't go see my kids in California until the government says it's okay, I just don't think I'm okay with that. So let me get on to our presentation. And just one other thing. My investors, I love you all. There's over 200 of you, and there's, I guess, another 50 participants and lenders. And we do issue a report every year. I really hope you do read it. We take a lot of time to put it together. As always, and as I said, our Tuesday meetings are open to everybody. We'd love you to come. I think the funny thing about our fund, and one's been up since 11, and the prior two started in the late 90s, is I keep sending out dividend checks so nobody calls me. I'm thinking I need to stop a dividend just to get everybody to come call me, but I won't do that. But please do review our reports. We sent it out a couple of times to you, and I hope you find it informative, and it's certainly transparent and unvarnished. So let me get to our presentation. I guess I would stand up for this one. So everything you're going to hear, this video, is all confidential. So please don't share it with anybody without our approval. We're subject to confidentiality agreements, and they do extend to our members and lenders. So please keep this confidential. The disclosure statement, I just highlighted 2 points for you because I wrote this myself. You've heard it before. My lawyers hate this because I wrote it. They didn't write it. But one of the statements we make is our performance is tied to real estate, but we're affected by the economy, government unpredictability, Mother Nature. I added the words including pandemics, terrorism, and unexpected turbulence in the stock market. Well, we got all of those in one big bucket this past month. I mean, you got government being unpredictable, the economy in turmoil, Mother Nature, on top of the pandemic, which it turns out was probably humans, not Mother Nature. But you had a bunch of tornadoes, you got hurricane season coming, you got fire season coming in California, and this is going to be seriously challenging times. Now, but we also believe real estate's a hard asset. And as my little chart I made, we're really low key right now, or we're low tech, but I made this myself. I'll explain it later. Real estate does always go up. And there are some reasons why after this pandemic's over, real estate's going to have a bump because there is going to be some areas of very much pent-up demand, and there's going to be some areas that might not come back, which is particular to the super luxury sector. Also, I disclosed at the end of last year, we had $4 million in the fund. That's management. That's Alan Lazaroff, our CFO, and myself. and that's now 6.1 million. So, you talk about this pandemic screwing things up. This is our 25th year celebration. We were planning on having parties with you all everywhere. So I'm hopeful as soon as they let us out of our cages that we're going to have a party and I'm going to be able to hug all of you and we're going to get back to normal. And that's critical because if they don't let us hug and they don't let us handshake, we got other problems. So just a quick on the Precita team. Yours truly, chief cook, bottle washer, and receptionist. Alan Lazaroff, our CFO. Allie Betts, our controller, who's a controller in more than one way. I mean, Allie's been with us now 20 years. My next door neighbor for a long, long time. She not only helped me raise my kids, but when they call her the controller, she controls me. Mike Cohen, who now has moved into due diligence and support for everybody. He's kind of the utility guy right now, vice president. Derek Weissman, head of asset management. 2 tours of duty as an intern. Know him since he's that big and has been with us 5 years. Brian Foley, vice president of originations, and is now also, everybody is becoming a utility player because we're in triage. So everybody's helping. Our one mantra today, help, 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 help. Kyle Smythe, who put together this wonderful presentation. So if there's any glitches, it's Kyle's fault, only kidding. Got to have a little levity here, right? Caroline Smythe's been with us 5 years. She supports Allie and Alan and runs accounting. Omar Khan, the grandson of my first investor when I was 19 years old. My first investor was Abdul Qayyum, biggest engineering and construction company in Pakistan. Now, Omar, over a month and a half ago, I said, you become a genius. And by the way, he's pretty close. He was a valedictorian at Texas A&M. I don't know what he's doing with us. I don't know any valedictorians except him. I said, you become a genius at every government program. So any investor in the fund, he's working for free for investors and for our borrowers and our close friends. And our banks don't need us on this one, but he's working closely with dozens of companies. Not only our borrowers, tenants, everybody we can help, we're trying to help. And Simone Paul, who backs up everybody and kind of his office assistant and manager and everything else. There's nobody to click. I got to click. So quickly, our summary of our performance, because we're going to talk more about the virus, although I'm getting bored talking about the virus, but we gotta. Since inception, we did $706 million in loans, 116 loans, and this is what's important. And we're going to talk about this when it comes to income recognition. 430 million of our loans paid off. And I think of the 89 loans, I think 86 paid off in full. Some of them even with default interest and kickers. And we had 3 loans that were bumpy, that we broke even on one, got nicked on another, and are still working one out. But we achieved a 12.7 net distributed yield every year to our investors. In 2019, 134 million, 13 loans, 10 repaid for 46. You always want to see loans repaying. And we net distributed 11.5%. And so far in the first quarter, we only did 1 loan. And I'll tell you about that and why I did it, because I saw the pandemic coming, or I saw the virus problems. But even in the first quarter, we had $15.8 million of loans repaid. That means that's realized, undisputable gains. So we 2 loans for 15 pay. And the first quarter, based on the math, we did a net of 9.5 for the first quarter. So the originations, as you see, we started in 12 with 41 million. We've had a peak of 153 in 18 and 134 in 19, and so far 2.6. As importantly, or more importantly, depending on who you ask when I say that, when we get paid off, we're happy for about a minute, and then we're upset for about a week, because it means that the capital we just got back, we got to redeploy. But look, we are a short-term lender. Our rates are from 9% to 12%. And the reality is you can't hold that money for more than a year or two, maybe 2.5. But real estate just doesn't produce, in the first mortgage world, that kind of a gain for a long period. So we're happy with our payoffs. We would like to work on retaining our borrower longer, which is why we're trying to evaluate if there's other buckets we could create to be able to hold them for 5 years after they stabilize. That's probably a conversation for summer or fall. And thankfully, confidence from the investment community is good. We've went from really what started with me, Alan, and a few loyal investors for a long time at 7 million and 12, and we're up to 76 million currently. Our yields, now look, when you go over here and you go, we were at 14 and 15 and 14. One, our rates were higher because competition was less. Two, we were utilizing a lot of leverage, which makes us more money. And then, as you see, as we went on to 12 and 9 and 11 and a half, our worst year was our best year, by the way. In 18, the reason our yields came down was we had $75 million of payoffs slam us in the late summer of 18. And you just don't magically get that money back out. Also, nice to know that last year we had, and this is end of last year and the first quarter, 88% was performing last year, 10% non-performing, 2% cash. We now are in 6% cash, 8% non-performing, 23% subperforming. Now, subperforming means they've missed a payment for 3 months. I will get into that because it's important to note, when you look back at all the payoffs that we did get, half of them were subperforming or non-performing at one time or another. Asset class, we continue to try to diversify. We're the most eclectic fund around. We got everything from junkyards to concert halls. When you look at specialty, we'll get into that. We purposely moved into specialty because there was less competition, mostly owner-occupied businesses that we like. So important to note because we are going into a recession. In a recession, workouts are important. Workout expertise is important. I did my first bankruptcy in 1981, and I've been doing it ever since. We only roll out our advisory platform really every 8 years before a recession happens. So most of you got a brochure and an email blast, but we just announced in January. We rolled it out last year. We were already engaged by a bank to do general advisory for a year. We had a medical office company that we were advisor to, and we had 2 investors who got screwed by their business partners that we've done asset recovery for. But we prepared this brochure in December, so we were already ready for the advisory service business. I encourage you, if you'd like to see a copy, it's on our website, but you probably got that email in January. So now we got to get to this virus. So we're going to talk about our strategy and what we've done so far. But again, chance will favor the prepared mind. No question about it. When you're going to open, who knows? But you got to be ready and you got to stay engaged. So what have we been doing? You may recall in some of my other Billy Balls and my letters, I'm we've always been a doctor. This has always been a triage operation. People come in, they either got an opportunity or a problem, and we help. So we're not going to change what we do. We're here to help. I got the smartest, brightest team. You got a combination of old dogs like me and Alan, and a lot of young, well-educated guys who've been trained by Alan and I, and most of them did their internships 1 or 2 years. Smythe, when you talk about kids like Kyle Smythe I know since he's a baby, and I've been abusing him since I can remember. The other guys, and I say abuse, I love them dearly, but the combination of the 40 plus years, the 40 years I have, and I just say kindly 40 plus that Alan Lazaroff has, is a great combination with this other team that's in their mid-20s to early 30s. We're helping borrowers. The first thing we did was, before the government even rolled out the programs, we said, we're going to monitor, we're filing applications for you, we're working with them every way we can. One of the ways we're working with them is not only filing these grant applications, but they all want to get refied so they don't got to pay our rates. So we're helping them update their financials, their profit and loss statements, their projections, and their schedules. We're working with them on interest deferments. If they're cooperating, I am not going to crush one of these people. I got very nice borrowers for the most part. I am not going to crush them, plus it's stupid to crush them. We're going to avoid foreclosures because nobody wins in a foreclosure, even if we win. The underlying premise is we lend money. If they don't pay us back, we own their property. I have no desire to own their property. And yes, it's a backstop of backstops, we're really good at owning property. I've built a lot of buildings in the first 20 years of my career, but we're here to help. We're trying to help. And this is something none of them could expect, and some have more complicated issues to navigate than others. Supply chain reviews. We were working on supply chain back in January before anybody was even thinking of this. In February, we were on the phone with Italy constantly. So there's definitely interruption, and that's going to keep changing, and we're just going to keep monitoring it. Reopening strategies, timing, and preparation, another big thing. And we're just keeping our investors and our lenders fully informed. And by the way, I got to thank all of you for being so great. I got to particularly do a shout out to our three key lenders, Connect One Bank. I don't want to name names at the bank, but I love you all. Northeast Bank, same thing. And Versant Funding. Been absolutely terrific. We have collectively about $100 million of credit facilities. Excuse me, I forgot one, apologize. And Orange and Trust. Orange and Trust Bank also, you guys are wonderful. So good news is we got plenty of credit available if and when we need it. And we're sitting on a good amount of cash right now. So here's the drill. And I don't know if I'm going to read all of these, but depending who you are, and by the way, no matter where you are, in a month, this may all just move a month. You got the optimist, which is we're going to see football. Let's just call it that. And maybe we see a beach. The stock market ain't going to rebound, and I sure hope we have Christmas and Thanksgiving and the we had Passover, all the Jewish holidays and all the holidays. We want to make sure, but people think I'm optimistic if I believe in that. And concerts, because we're in the concert business, commencing in July 1st. And I'm still hopeful that happens. All we need is for one band to stick their toe in the water. The moderate says that the NFL has a delayed start. Colleges have a delayed start. No concerts at all. And the stock market goes down a little more, and we don't have such a great holiday. And the is not right, but what we're doing actually in our stress test that you'll see is we're playing the pessimist, hoping for the moderate or the optimist. But the pessimist believes we're stuck in this for 2 years. Now, Governor of California said he could see it being 2022 before normalcy occurs. I don't believe in this. We got to find a vaccine, because you find a vaccine for this, another one comes along, and what do? You shut it down again? But we've stressed our portfolio out till December 21 right now, and you'll see that in a minute. But look, there are people, I say over here, more viruses, war, terrorist attacks, natural disasters, internet failure. You know, I've heard people saying the craziest things. And until the people get their heads around, shit happens. Shit happens. And we've all had people die on us for different reasons. And, is this bad? Yeah. Is it worse than starvation? more people die of poverty every day than die of this virus. So, there's a lot to be questioned after this is all over, which is, would it have been just as bad if we were allowed out and we didn't lose $10 trillion into, because the government's going to spend $10 trillion on this. So let me give you a quick version of our stress test analysis. We are open. Any of us you can call. At the end, you'll see all our emails and cell phones. But I'm going to give the basics of it. First, let me talk about income recognition. As a lender, when you get interest, you can, if you want to, pay down your loan with it versus declaring it as taxable income. To date, we've always taken interest and because all of our assets were worth more than the debt, and declared it as income. Interest reserves, the good news is about half of our portfolio has interest reserves, and in our analysis, we believe by next summer, the pre-virus values return on these particular asset classes, which are mostly affordable housing. So we'll have interest reserves enough to, I believe, pay our base dividend. Value analysis, I don't care who you talk to, there is no value in the next 120 days. There is no way to verify value. The only thing you can do is predict how long it will take to get back to pre-virus values, with the exception of super high-end luxury, anything. Our eventual exit is always the same thing. It's a payoff, it's a loan sale, it's ownership, equity, or a combination. Government regulations, media, and fear are the biggest wild card. So here's what we did. We took our portfolio and we said, no payoffs till December 21, no interest payments, none. Now that's not going to happen because we have interest reserves, but we just assumed it. Everything accrues and gets added to the loan. No default interest earned, and all the senior lenders are going to be kept current. And we produce, based on that analysis and based on simply that the values don't even go up, they just return to pre-virus value by December 21, the fund should produce an 8% yield per year. If you go to, or kind of partial worst case, which assumes we collect some default interest and some of our exit fees. In fact, the number we picked was $3.5 million between our interest, default interest fees, exit fees, and squirreled nuts. We'll produce a 9.9% yield. Again, that's annualized. The best case we have, which could happen, is that some of our deals pay off this year, some of them pay better. We redeploy money at a modest 10%, by the way. We're going to be able to redeploy. One thing about this crisis, we're going to be able to redeploy money probably at 15 to 20. But we just imputed some payoffs. Now, there's backup for all of these models, which Kyle Smythe's got probably 10 pages of detail. And I welcome you to question him. He's a very smart guy, and you can question anybody in the company knows the stress test. So these summaries are backed up by 10 pages of analytics. But if these payoffs and these payments occur between September of this year, with some in first quarter, second and third of next year, we could produce as high as a 12.6% annualized return for 20 and 21. Let me get to our outlook. Our outlook for this whole thing is triage, assist and help. We are going to start originating again, but we're going to stick to our 18 and 19 strategy, which was, so this is right out of our 18 and 19 strategy, by the way. I haven't changed it. Luxury, retail, residential, office, oversupplied, overvalued, we don't touch it. Wholesome housing and affordable housing, undersupplied, just reported today, 1.2 million starts, way low. So we like it. Everybody's going after the big projects. We're going small. Everybody wants bright and shiny. I apologize to my borrowers, but we're going ugly and in need of repair. No one likes owner-occupied. I love owner-occupied. The Fiesta, those people, same families run it since the 60s. I'll stick with people like that all day long. Shorty has owned the tow truck company since the 70s. That's the people I want to be around. Road to recovery from this virus, I don't know what to do. I want to scream. And there are people that disagree with me. But if the Grateful Dead go on tour next week, I'm going. I don't care. At some point, society has got to say, I want to drink, I want to dance, I want to cheer, I want to roar. And until that happens, you're going to have a lot of stadiums empty. So it's very strange times. My promise, as always, is to be truthful, honest, and transparent, and work my ass off. And my team has worked harder in this past 30 days than I think they've ever worked. So thank you for your continued support. Again, please keep this confidential. Please do. I sent out the Billy Bowl on Tuesday. It's on our Facebook page. You got a link to it. It really tells you how I feel and think. And I'm posting up on Facebook pretty regularly on opinions. And listen, you're going to have a bunch of attachments to this email. One of them will be my cell, my email, and everybody else's. Call any of us anytime. And look, be well, keep the faith. I cut off my arm before I screw this up. I think I know how to manage it. I've been doing this for 40 years. This company's been in existence for 25 years without ever having debt. I pay my bills every month, and I plan on continuing that until I retire, which don't look like it's anytime soon. So I do love you. I do miss you. Be well, be safe, but don't be afraid. Thank you.